Welcome to MarketTamer.com. It is Thursday, July 16th, and nothing in this presentation shall constitute a recommendation to buy or sell a security. As always, please contact your financial advisor. All right, so with that said, let's kick off and look at the S&P 500 here. We see that in the last 3 days, the market went from its lower Bollinger Band all the way to its higher Bollinger Band. And yet, a lot of people were expecting a breakdown here because we had this head and shoulders pattern form, and we were expecting with the neckline broken that there could be continuation to the downside, and yet that did not happen. Now, this is really a good example of expectations not being met, and it's really our core competence at MarketTamer.com to react well to this situation and understand that not always will our expectations be met, but we should know what to do if that's the case, i.e. how do we adjust to the trend and still make money. Now, those of you that may follow Jim Cramer and have read his history, whether you think well or poorly of him, the bottom line is he had a pretty good record as a hedge fund manager. And one of the things that used to frustrate people when he used to speak of his positions was that he might say on one day that he was bullish and yet the next day say he was bearish. And so people who are trying to imitate or follow him or take advantage of his insights would often be frustrated because they would believe that he was switching his positions in the middle of a trade, and often he was. And his attitude to that was, that's okay. It's okay because the market told me to do so. And this is very similar to what you're dealing with here in terms of this latest rally. It's possibly come sooner than many people expected, and yet it has come, and so we have to deal with it. We can't just sit there and say, hey, I thought we were going down, therefore let me stick with these losing positions. No, the appropriate thing to do is take action when the signal comes in. What that means, and if you refer to some of my earlier videos in the month, what it means is that we have committed to a position earlier which may be bearish, and we must now commit to recognizing that we are wrong, accepting that we're not always going to be right, but that we can always adjust to the trend. So based on our system, which you can see in Module 7, Lesson 3, this day on Monday was actually a buy signal, and with the buy signal, we go higher. It won't always be the case. Sometimes that buy signal will be wrong, and so we must account for that also, which is why we build in exit points to each and every single position. Although this might seem frustrating, the bottom line is that even though you might be wrong in the short term based on an expectation, by sticking with the system, you will look to be right long term, which is the optimal situation. Nobody really cares if you're right in the short term and you lose money long term. Key thing is to stay in the game and end up making money month in, month out. So any given day doesn't matter, but any given month certainly does, and any given year even more so. With that said, let's move on, take a look at the Dow Jones here. The Dow Jones is looking very similar, up around its Bollinger Band, pausing today. Might expect to pull back to a 5-day before moving higher, but the bottom line is the trend is up right now. We are in buy signal territory. What's really interesting about it intraday, even though we haven't closed yet, is that the NASDAQ is actually outperforming. It's still slightly positive on the day, and this is what we saw during the strength period in the past from March to May. We saw the NASDAQ slightly outperforming. If we see that again today, that will be further signal that the bullish trend has resumed with greater conviction. Now let's look to Exxon. Exxon is actually showing really perfect sort of signal for those of you that are interested in jumping on board at this point in time. It showed a buy signal yesterday. It's popped back to the 5-day, often a wonderful time to buy. Obviously, again, no guarantee that it will continue upwards, but as our system goes, that would be a pretty decent entry point. Another stock that we might take a look at here is that of Toll Brothers. Toll Brothers also showing similar action to Exxon, and similar conclusions can be drawn. This is the US dollar. We're seeing the US dollar go weaker. That would explain why we see Exxon higher, see housing higher, see the market higher. It all plays together. And finally, we'll just note for those of you that are looking to earnings this evening, Google is reporting earnings later on tonight, so take good care with that if you're looking at volatility plays. All the best. Take good care.